Welcome back. You're watching The Money Show with me, Kavita Thapliyal, and last leg of the show where there are plethora of funds available in the market to invest your hard-earned money in. But how do you assess which is the right fund for your portfolio? What are the criteria that one should look at? To help you navigate through this maze, we have Hemant Ustagi, Wise Invest Private Limited on the show today. Also, do not forget to send us your portfolio queries on our WhatsApp number, which is 865-797-4571. You can also email us your queries on themoneyshow@etnow.tv. So anything related to your financial goals, your investment strategies, send us across on our WhatsApp number and email ID. Good evening, Hemant, and welcome to the show. I have our first viewer online with me, who is Aditya from Pune. Aditya, hi, good evening. Thank you so much for sending us your question. I have Mr. Hemant Ustagi connected with me, who will be sorting out your financial plan. So you can go ahead with the query.
Hello, sir. Good evening.
Yeah, I can hear you. It's 15,000 one-time investment in mutual funds you want to make for 2 to 3 years, right?
Yeah, yes.
Can you confirm the amount, Aditya?
Like 15,000 right now.
15,000 one-time investment for 2 to 3 years.
Yeah.
Is any specific reason why you just want to lock this money for 2 to 3 years?
Actually, I finished my PG till then, so I need some cash in that.
Okay. All right. So are you studying? You're a student?
Yeah.
Okay. And you have, so you are also doing a part-time job, or this amount is a part of your savings? How did you accumulate this?
Part of the savings.
It's part of your saving. Well, that's wonderful. How old are you, Aditya?
26.
All right, so that's very encouraging. Thank you so much for sending us your query, because your question is very inspirational for all those people who just keep thinking about or keep questioning the time as to when they should be putting money in the market. But then, Hemant, we have Aditya, who is still studying, and this is the money that he's saved, and he's looking to invest for 2 to 3 years. Although the time is quite short, but then what kind of a strategy you think will be good for him?
Well, Kavita, I think the first thing I would like to say is that this is the right thing to do. What Aditya is doing is that, he has clarity in terms of how much money he wants to invest. He needs a little bit more clarity in terms of his time horizon. He said 2 to 3 years. So I'm assuming that he can put this money aside for 3 years. And the reason why I'm saying is the best right thing to do is because, when you know that you want to invest money, you need to explore what are the other options that I have. And again, assuming that since he is, asking this question to us, that is looking beyond investing in traditional options like fixed deposits and all. So clearly, the mutual funds have answer for your, requirement. The best thing about investing in mutual fund is, irrespective of whatever your time horizon, whatever your risk profile, there are products available for you. So Aditya, my recommendation to you would be that if you can keep this money aside for 3 years, and if you're okay with some amount of volatility from time to time, because you are expecting higher return than what you will get in the traditional options. So my recommendation would be that you should look at, balanced advantage funds. Now, these are the funds where the money is invested in equity, arbitrage, and debt in the manner that exposure to equity and debt, equity and arbitrage is 65%, which means that you get the taxation of equity, which may not be actually very relevant in your case because you're just investing whatever saving you have there. So I don't think that will be important for you. But the best thing about this kind of fund is that the exposure to equity is managed in line with market levels. If the markets are high, the exposure to equity goes down. If the markets are low, the exposure to equity goes up. I think this will be the perfect option for you for a 3-year time horizon. And I'm recommending a fund to you in this category, which is ICICI Pru Balanced Advantage Fund. But like I said, be prepared for some amount of volatility. Don't worry. As long as you can stick to your time horizon of 3 years, you can expect to get very healthy returns from this.
All right. Aditya, is there anything else you want to ask?
No, sir. No, ma'am. Thank you so much.
All the best. All right, let's move on. We'll take Harini's question. Do I have Harini with me? All right, so I don't think I don't have her on the call with me, Hemant. But then again, she's just 22 years old and she recently started working. So Harini, congratulations. She's currently doing SIP in 3 funds already. Okay, and she wants to know if she can invest in a fund for tax benefit. Okay, so we don't have the funds details, but then she sounds like someone who's made the right decision for herself, although it would have been nice for us to check and maybe give her feedback on that. But then, yeah, tax saving fund. Which one would you recommend and why?
Kavita, before I talk about which tax saving funds you should look at, but I think this is the perfect example of when we say that start investing early. Many a times the question is asked, how early should I start investing? I mean, this is the best example. She is 22-year-old, recently started working, already doing SIP of 15,000. I mean, this is the best example, and the advantage of starting early is that you benefit from power of compounding. You become a better investor. You understand the nuances if you're investing in equity funds, because the fear that you have, which stops a lot of people from investing in equity, is volatility. You kind of get used to it. I think this is the perfect example of how early one should start investing. As far as her requirement is concerned for investing for tax saving, one thing I would like to recommend to her is that figure out whether you need to be in the new regime or the old regime, depending on your salary level. Look at that. If you still have to go ahead and invest in for tax saving, mutual funds offer equity linked saving scheme, which is a wonderful option for saving tax. In terms of return potential, it is one of the best options that is available for saving taxes under Section 80C, and the lock-in period is also 3 years. So I think it's a great option. In this category, my recommendation would be that she can consider Bandhan Tax Advantage Fund. Again, like I said, it's a great option, and the best thing is that you get to invest in equity, which again I think helps you create wealth over a longer period.
Right, so this is the recommendation for you as far as tax saving funds are concerned. But then how do you pick up the right tax fund, tax benefit fund? What could be the criteria for you to filter out the best one for yourself?
Well, I think the criteria more or less is the same as per any category, Kavita. Since these are equity-oriented funds, so clearly you need to look at 2 aspects. One is you always look at slight longer-term performance, see the consistency vis-a-vis other funds in the same category, and obviously as against the benchmark. That's one. And the second is, if you spend some time, you should be able to look at the portfolio and see what kind of allocation is there for different segments of the market. And most of these ELSS funds will have a bias towards the large cap, and you will see maybe some exposure to mid cap and small cap, but usually you will find a combination of large and mid. So I think, like I said, one, you need to decide whether you need to really go in for the tax saving fund. Once you have made up your mind and you have clarity, look at fund which is consistent, and look at fund what kind of exposure they have to different market segment. Because if you really want to look at a fund which has some kind of stability within equity, so you need to go with a fund which has bias towards the large cap. So look at composition of the portfolio, segment-wise exposure, and consistency in performance.
All right, so that's the answer for you, Harini. But then we move on, and the next question is of Sandeep Patil, and he's investing in 4 mutual funds, which is Quant Small Cap, Motilal Oswal Nifty Micro Cap, Parag Parikh Flexi Cap, Nippon India Small Cap, and he wants you to review his fund mix. We don't have more details beyond this as to for how many years he wants to be invested and what's the corpus that he's looking at. All right, so how well diversified is he? Too much exposure in small cap, making it very aggressive. He also has micro cap passive investment done.
Yes, Kavita, I think he's investing 4,000 rupees through SIP in 4 funds, and they're all equity funds. So like you mentioned, there is no mention of the time horizon, but I'm assuming that since he's investing in equity, they're investing for the long term. Important thing is that if you're investing for long term in equity, I think that's the best strategy because that's the only asset class which helps you stay ahead of inflation. But the problem here is that we know that equity itself is an aggressive asset class. Within that, if you really analyze the portfolio, there are two small cap funds, one micro cap fund. Micro cap, again, is an index fund basically, but it's investing in 250 companies beyond 500 companies. So this is the riskier part of even the small cap segment. So I think the portfolio right now is very, very aggressive. So my recommendation would be that he can continue with Paramparek Flexi Cap, which again has a bias towards the large cap, and invest some amount in US equity, which I think should remain in the portfolio. With the current size of the portfolio right now, only with the investment of 4,000, my recommendation would be that he should look at only one small cap. Both the small cap funds in the portfolio are good. He can actually decide to keep any one. And for the remaining two, which is one in the small cap and one in the micro cap, my recommendation would be to look at including large and mid cap funds, which could be HDFC large and mid cap or Kotak Equity Opportunity Fund. But I would like to also add that if he intends to increase his exposure to like if increase his SIP in near future by maybe like a couple of thousand, then maybe he can keep investing 2,000 in small cap and micro cap, one small cap and one micro cap. But in that case, like I said, when you add, try and include large and mid cap category fund. So with the current kind of investment, my recommendation would be make changes and include one large and mid cap fund in the portfolio.
All right, quickly, let's move on to the other question. Ruturaj's question via email, and he's doing SIP of almost 21,000, and he's got Kotak Multi-Cap. He has Nippon India Small Cap and ICICI Blue Chip, and he's also investing in UTI Mid Cap. Aditya Birla Tax Relief also he has, Motilal Oswal S&P 500, and okay, and he also has some lump sum investment. He's got Motilal Oswal Nasdaq Fund of Fund as well in his portfolio. He's given the details as to when did he start investing. So detailed information, but then he wants to have a retirement corpus of 6 crores. And you think the SIP amount that he also wishes to increase by 10% will be enough for this goal?
Well, Kavita, I think he's currently investing around 21,000 in 7 funds. 3 goals that he has mentioned. One of them, as you said, is to create a retirement corpus of 6 crore. Then he's looking to buy a car maybe after 2 years, which is for which he needs 20 lakhs. And then he's also looking to buy a house after maybe 7 years, for which he said he will take a loan. But even there, I think he will need to kind of generate some corpus for the margin money. Let me just first address the his goal of retirement. If I assume that he's going to retire at 60, which means that has 29 years to build this corpus. So from now on, his investment of 21,000 through SIP, if he continues this for the next 21 years, assuming annualized return of 12%, he should be able to build a corpus of 6.6 crore. Good thing is that he mentioned that he can increase his SIP by 10% every year, which obviously is a great idea because that will help him generate even a larger corpus. For his car, which is maybe 2 years away, he requires 20 lakhs. The accumulated corpus till date is 16 lakh. So this part of accumulated corpus can be aligned for buying a car after 2 years. So he can take out 20 lakhs and buy his car after 2 years. And for the margin money for the house, if he requires that, like I mentioned, there is a scope because he is going to be accumulating larger corpus than what he requires. Maybe some part of that can be assumed for the use for the margin money. So I think in terms of an investment strategy, everything is fine. One change in the portfolio definitely I want is that for the ELSS fund, where he's investing 4,000, he's currently investing in Aditya Birla Tax Relief 86. Earlier in the show, I mentioned about Bandhan Tax Advantage Fund. I believe that for his future investment in the ELSS category, Bandhan Tax Advantage Fund will certainly be a better option than Birla Tax Relief 86. So one change, the rest of the funds can be continued the way it is.
All right, Hemant, I think that will be all for today. We are out of time, but thank you so much for taking time out and helping our viewers with their financial portfolio queries. And on that note, it's a wrap even on the Money Show, but then I'm going to leave you with our WhatsApp number, which is 865-797-4571. You can also email us your query on the Money Show at etnow.tv. So we'll be waiting for your questions. Till then, goodbye. Thank you for watching.